Thanks team. Hello, I'm Cameron. I'm the founder and CEO of TallyMoney. That's our stand over there, so if you find any of the information we're about to talk about interesting and useful, please feel free to come and see us and speak to myself or one of the team. So there's a lot of talk about gold. It's performing very well as an investment, but I wanted to talk today about the what's gold's warning and what's maybe the message we're missing here and indeed the solution if we heed that message. So I wanted to kick off with a joke that you guys have probably heard at some stage, but it's the parable of the drowning man. There's a very devout Christian fellow who is caught in a flood and the waters are rising, and he's praying to God saying, God, please save me from this. And along comes a canoe, and the person says, look, come, I can take you to safety. And the person on the roof waves them off and says, no, God will save me. And so a few more hours pass, the flood waters continue to rise. It's becoming more and more sort of critical that he gets out of there, and a powerboat comes along. And they say, come on, mate, let's get in the boat, we can take you to safety and you'll be fine. And he's going, no, God will save me. And so eventually a few more hours pass and it's getting particularly perilous. The flooding is right up at the edge of the top of the roof, and a helicopter turns up and they call down and they say, we're going to throw you a rope down, climb up, and we'll fly you to a safe, dry place. And he says, no, God will save me. And so anyway, invariably, the floodwaters come up and the person dies. So they get to heaven, and he says, God, why didn't you save me in my hour of need? And God says, what are you talking about? I sent a canoe and a powerboat, then a helicopter. Anyway, the reason why I'm opening with that is because I think we are somewhat in that space with what we have as cash in our system. So we're seamlessly linking the flood waters to the flood of cash printed and slushing around in the fiat currency system, and one of the messengers to say you need to get out of there is in fact gold, and indeed it may be able to help us get out of this problem that we face with the rising flood of fiat currency. So what has gold been trying to tell us? This is a gold chart over the last year. I'm sure you guys are probably all familiar that gold's gone up about 35% against the pound. I'm interested in pounds because I live here in the UK. So I'll do everything in pounds. Against the pound, it's gone up 35% in the last 12 months. And is that sort of saying to us, is this a high return investment? Is that what gold's purpose is? Is it perhaps useful to supercharge your savings in some sort of way? Gold has gone up over 44% in the last 2 years compared to the pound. If anybody's got savings in the room, I won't get you to put your hand up, but do put your hand up if your bank is paying you 20% a year as interest on your savings. In fact, if you're getting 10%, anything in the double figures we will take at this point. So the answer is, of course, they don't. So maybe it's a thing for savings. Is it an inflation hedge? Over the last 5 years, gold's gone up 75% against pounds. And over the last decade, it has gone up it's almost tripled in value. So my son's about to turn 10 next week. I remember when he was born, if I'd put some money away then, it now has lost 2/3 of its value. That's not a good currency that we should live in and be able and rely on. But is it a proven safe haven, as some people will tell you about gold? But what has gold really been trying to tell us? Well, first of all, the last year, if you use gold as the measurement, Great British pounds has been devalued by 26%. But is that an anomaly? In the last 2 years, inverting the graph, pounds has devalued by 30% in the last 2 years. But maybe that's just a trend. But so let's look a bit further. In the last 5 years, the pound has devalued nearly 43% against a measure of something like gold. So in fact, is this the norm? And if we have a look at the 10-year graph, which we looked at earlier from the opposite way, you will see that we've lost 2/3 of the value in the pound value when measured against something that is a true measure of real devaluation. So what's gold been trying to tell us about pounds sterling? And that is, and this is gold's warning, that fiat currency is being devalued. It's not a bug, it's a feature of the system. So how and why does that happen? Well, first of all, we have in our system an artificial currency that can be arbitrarily expanded and printed. So we have the money printer board game here, just to kind of, it's a humorous way of displaying that. So there's a mechanism to do it because the currency isn't anchored to anything physical or accountable to any other sort of source of productivity. And then you have people in charge making decisions in these institutions and in government that it serves their purpose to inflate the money supply and devalue the units of currency that we're operating in our daily lives and that we're saving up in. And we've got Mark Carney leaving the Bank of England here. He did a lot of quantitative easing, a lot of extra currency printing. At the time, he looks like a good guy because GDP's going up. Of course, we realise GDP per capita has been going down the last couple of years. But he does all that. He leaves the Bank of England. It's a step up. He's now the Prime Minister of Canada. So, the fiat currency fractional reserve banking system, because of this mechanism that it has, is really a wealth tax and a wealth distribution model. And in any model, there are winners and there are losers. Let's start with the losers. These are the earners of the currency. And you will know if you fall into this bracket if you're on this list. So we have depositors, savers, private sector employees, business owners, wealth builders, businesses, corporates without government contracts, and taxpayers whose income is not derived from the public sector or public sector contracts. Well, that probably, we all are in one of those categories, which is not going to make us feel very great at the minute. But let's at least feel good for the winners, shall we? So the winners are the controllers of the money, of the currency. So you've got a central bank, you've got commercial banks, so commercial lenders where they can write new money through writing loans, create new money. You've got government who overspend, overpromise, overspend. You have borrowers. Actually, I've got a mortgage, so I'm in this list on the borrowers. It's a good thing if the thing that I owe back is being devalued by design over time. That is actually a benefit. I get more hurt on the losers category. I got more irons in the fire over there, but I do have a mortgage, and as a borrower, you know, this is beneficial. Bureaucrats are the winners. NGOs are the winners. Quongos and publicly funded think tanks are the winners. Independent, non-departmental government bodies. Corporates with government contracts, local councils, and state pensions. So you can have a look at whether you're in the winners camp or the losers camp, and if you're in a little bit of both, what the weighting of that is. So, how can earners become winners? And what can gold do about it? Well, there are three elements to money. It should be a great store of value, a great medium of exchange, and a good unit of account. And I will say pounds is a great medium of exchange and unit of account. But it's a terrible store of value for the reasons that you would have seen earlier today and on those graphs I was just presenting. Bitcoin's not there yet. I'm a big believer in the long-term thing of Bitcoin, but it's not really there as a competitive, to be a competitor alternative mainstream currency. And gold on its own is a great store of value, but can't do these two. And this is the problem with gold. I've got this is the smallest bars I could get. This is real gold. I'll just hand them, just pass them around if you want. That's a gram of gold. Some of our staff have the other ones, I hope. But that's a gram of gold. They charged me, it wasn't Solomon Brothers or whatever, but where I bought that, they charged me a 17% premium on what a gram of gold was on the spot price. Well, anyway, they did that. And I've got this thing, if I could just have that for a second. But I can't do anything with it. No one will accept this. And even if they did accept it, with the premium they charge me, I'm not spending £88 on a cup of coffee. because they can't give me any change. So gold doesn't work as money, but it does work as a great store of value. So what we set out to do, you can keep handing that around, but can you bring this back? This is real gold. It's a precious thing. And anyway, the security of operating in physical gold is also a thing that we needed to overcome. So our moonshot in addressing this, pounds are devalued by design. It's a feature, not a bug. It's done because people are incentivized to do it. There are winners and losers. Gold's an excellent thing, trusted for thousands of years and proven to increase in value, and that's great. But our moonshot was to create an independent, standalone monetary system of sound money, where it is a great store of value that you can rely on, medium exchange unit of account. It is universally understood and accepted as to how it derives its value. So this is where cryptos fall down. It's very confusing how they derive their value, and they can go to zero. Gold's never been too big to fail. Even if it goes down a bit, it doesn't fall off a cliff. We wanted something that had to be accountable. So it has to be accountable, the unit of currency, to something. So we can't just magic it up. Otherwise, we would be tempted to do what central bankers are tempted to do, and government, treasury, with fiat currency. And the people making the decisions need some level of accountability too. So if I have customers in our system and we don't deliver what we're saying we're going to do, I'm not going to have a business. So I have skin in the game. It's in my interest that they do well, that it is accountable, that we do what we say, and indeed we do. And lastly, if you can, you want to design something that's already familiar to use, so that people don't have to learn a new thing. So what we did is we went from concept to product, and now we're at a position ready to go to scale, where we put together physical gold and a platform technology that we built, and that equals having an alternative mainstream currency that UK citizens can now look at having for their savings, as a backup bank account, or even as their primary account if you really are fed up with the fiat currency system. So what do the customer get? They get the best of both worlds. You get, you're in a system that protects and benefits you, the depositor and earner of the money, not the financial institution that gives you the convenience of payments. So it looks after you, and it's in their interest to do it, being us. You get a sort code and account number denominated in a currency that's not issued by a government, denominated in milligrams of gold. We all know what it is. You just saw 1 gram of gold. It's like 1,000 tally. You get a debit MasterCard. You have instant access to your money. We make it very simple and transparent, and we do it at a low cost. Can I just get that gold back? Well, if anybody's still... Yeah, that's what I thought. And that's the problem. That's why my tally card, I'm not limited to 1 gram of gold. A sec. I can either use that 1 gram of gold and not be able to use it, or I could get all my gold connected seamlessly to the incumbent point of sale and banking rails, and with the MasterCard scheme network. And that's what we've done. We're, and as I say, it's low cost. We are transparent. Not like that. We are transparent on fees. And so we have a one-off activation fee, which none of you will pay if you use the MasterCard, the Master Investor promo code that we have today. If you want to, you'll find it on those little brochures that you have on your seats. That'll save you the whopping £9. That's probably not going to change your life, but if you can get it for free, you might as well. It's 1.49% on the way in, which covers a fixed FX rate from going from one currency into something else, and there's a gold handling component to that. And then that's it. You actually hold gold at spot and you spend at spot. The only other thing you will incur is an account keeping fee, which is £3 a month to have your Tally account, which gives you all the app updates, gives you customer support, makes the storage, the insurance of your gold, makes it all, keeps everything ticking along. So that's 0.5% per annum, or £3 a month. But when you spend, when you withdraw, if I just bought a couple of bottles of water with this, that's all at spot, cost me nothing. We are trusted in what we do. So we work with, in breaking down payments, gold custody, all these type of things. So we use the seasoned best professionals where we can. So we use Brinks, which is really arguably the best in the world for high security logistics on the gold vaulting. They are a member of the London Bullion Market Association. We use as brokers there in StoneX, they're LBMA accredited as well as licensed with the FCA. We use card manufacturers, e-money institutions there in Allpay and Transact Payer, FCA regulated, as well as MasterCard on the cards and the payments routes. So we do all that. We have a very, we're trusted by our customers. We are set up to make sure that we deliver a great product at a great price for our customers. Otherwise, it hurts us because we don't have a business. And lastly, we are old. This has been live since 2009. This is not a flash in the pan thing. We've spent years developing it as a live product to make it more robust and scalable, to fulfill really what the vision for Tally is. That includes over the years recruiting the right people and who understand what we're trying to achieve. So we've done that. When we first went live in 2019, a cup of coffee cost £2.40, and it used to cost me nearly 80 tally. Now a cup of coffee costs me £4, costs me about 54 tally. Because the currency I live in is a deflationary currency. It's becoming more valuable as time goes on. And while prices rise, it's increasing in value greater than that. So we do have a mainstream alternative here now. You're welcome to come and speak to us. We're just in that bright yellow stand over there. We've got our CTO and others. Come and download the app, open an account, try it for yourself. It's a little bit of a mindset shift that you're not using the money you've been using all your life that's been provided by the government. But in my view, when the state-run money is really failing the public, then we need to be using a money that's not controlled, by the government, and that we can design by the people for the people. And that's it in a nutshell. TallyMoney, it's gold you can spend.